Good afternoon. My name's Mo Pedersen from AgForce Training, and I'm just going to introduce you to the rest of the group that will be presenting today. So we've got Brady Miell and Sarah Castellanos from AIA and Elle Rands. Elle, would you like to just quickly introduce yourself?
Sure, thanks Mo. Hi everyone, I'm Elle Rands, the Regional Manager for Southern Inland Queensland. So I am based in Goondiwindi. I work remotely, but we have an office up in Roma, but often on the road a fair bit too. But yeah, today I'll just be giving the presenters a hand with letting people into the webinar and then just answering, helping answer the questions in the chat. Thank you.
Sarah?
Hi Mo. Hi everybody. My name is Sarah Castellanos and I work at Agricultural Innovation Australia. I'm going to be handing over to my colleague Brady shortly, who's going to explain a little bit more about our environmental accounting platform and give you a little bit of a demonstration of how it works.
Thank you, Sarah, and of course, thanks Mo and Elle for having us on today. So yeah, Brady Miell from Ag Innovation Australia here. I work with the environmental accounting platform every day that we'll be running through, and yeah, very much looking forward to doing the demo.
Thanks, Brady. So just a couple of housekeeping things for today. First one is, if you have questions, could you please use the chat function? We'll try and monitor the chat as we go through, but more than likely we'll keep the questions till towards the end. And then once we've answered everything that we possibly can in the chat, we will then ask people to raise their hand if there's people not feeling comfortable using the chat function. If there are questions we can't answer, we will take note of those and get back to you personally with those, with the relevant person to assist with those answers if we can't answer it directly. So today, I would just like to thank the Commonwealth of Australia through the Department of Climate Change, Energy and the Environment, Water, for funding the carbon farming outreach program in collaboration with Grower Group Alliance. So today we're just going to do a very quick introduction here, and then I'm going to hand over to Brady, who will go through some more information. So here we go. So we're looking today at emission calculators, some data required, and then Brady's going to go through a practical demonstration of the environmental accounting platform. So just a quick one, there are a whole heap of different accounting tools out there, and they require different quantities of data, and the information that you give, depending on which calculator it is, as to how safe some of your personal data might be. So please be mindful and read all of the privacy information before you go signing up to something that you're not sure about. And Brady will definitely go into more detail about that. So if I can hand over now to you, Brady, I will stop sharing, and Sarah, you may share. Yeah, thanks, Brady.
Thank you. I might have Sarah start off here because, you know, she's been with a few years. I've been here just a few weeks. So yeah, I'll let her give the quick spiel about and what we do.
Thanks, Brady. Just want to make sure everyone can see the screen okay? Perfect.
Yes.
Wonderful. Thanks for having us, everybody. Yeah, I just wanted to give a brief introduction to Agricultural Innovation Australia, or AIA. We were established by all 15 of the Rural Research and Development Corporations. I'm sure you're familiar with the likes of MLA, GRDC and CRDC. So they set us up a few years ago, and the mandate that they gave us to work with was really to help all of agriculture, fisheries and forestry work together on the complex challenges that none of them should really tackle alone. So things like carbon, things like sustainability and climate fit quite neatly into that space, hence our work on the environmental accounting platform. So what we do, so we actually facilitate collective investment from the RDCs into whole of sector solutions. So we're really looking at things that support all of agriculture, the big sort of complex challenges that are focused on the long-term interests of industry, and we're really about trying to help avoid duplication as well. Really importantly, we were set up as an independent and not-for-profit company. So when it comes to things like the EAP, producers and industry can be really comfortable that we're not a commercial entity trying to drive business out of farmers. We are very much about how do we support all of agriculture, achieve consistency with on-farm calculations. And I think Mo, the slide that Mo showed before with all the calculators, yes, there are a large number of calculator options that are out there, and you should do your research into the ones that are the right ones for you. But AIA last year was given a grant by the Department of Agriculture, Fisheries and Forestry, so the National Department of Ag, Fisheries and Forestry, to really support consistency across all industry tools and calculators. So Brady's going to talk about our online calculator. We also have the calculation engine that sits behind that, which any industry tool, calculator and service provider can use. And the grant that the government has provided us is to really encourage them to connect to that calculator so that there is consistency. So that was a really big problem and a big challenge that we set out to solve, is how do we make sure that everyone's getting the same result out of a calculation and they can compare apples with apples. That's probably it from me. I'll hand over to Brady now, and he'll tell you a little bit more about the actual platform itself.
All right, thank you very much, Sarah. First, before we get too far into the platform, I might just go into why emissions accounting is important. Obviously, everyone's rocked up today and signed up for the webinar, so there's some interest, but I might just go for the why before we get too far into the weeds. So 3 points I'll say as to why is maintaining and gaining market access. So knowing your number and having a lower number compared to benchmarks certainly does help with preferential product marketing and some price premiums out there. A lot of grain growers already participate in these price premiums through Sustainable Grain Australia and ISCC certification. And a lot of the processors are also moving towards their own sustainability programs with several price premiums across the grid, such as JBS and Greenham's down here in the south. And also in terms of international commodity markets as well, carbon borders are going up around the world as we head towards net zero 2050, with probably the prime example being the carbon border adjustment mechanism in the EU. Now, I will be clear that the carbon border adjustment mechanism doesn't apply to agriculture currently, so there's no threat to market access just yet, but it just shows that the EU is heading that way. For example, under the carbon border adjustment mechanism, fertilizer is covered by it. And if there ever was a situation where high emissions fertilizer wasn't going to EU agriculture, but was going to Australia agriculture, that would probably extend the carbon border adjustment mechanism to include Australian agriculture to make sure that fertilizer is still accounted for. A couple news articles I'll point to quickly as well. One of them is Asahi in Australia has just announced that they will only be buying barley from grain growers with data on sustainability. So that goes to show that selling a premium malt to Asahi has benefited from knowing your emissions number. We'll just move on to the next slide, Sarah. More so on the supply chain, there's two major things going on with corporates in Australia. One of them is mandatory under the Australian Sustainability Reporting Standards. That's the Australian government mandating that large corporates need to start reporting on the supply chain of their emissions. Now, it doesn't mean they need to know the exact number. They can measure a couple of their suppliers and then model across the rest. But it goes to show, the direction we're going here with kind of these carbon checkpoints along the way. Another scheme that a lot of corporates are participating in is Science-Based Targets Initiative, which is more so international, which once again, with an export-focused agricultural commodity market here in Australia, it is worth being aware that a lot of multinationals are also thinking about these things as well. Next slide, Sarah. Yeah, so just a quick note on scope emissions and how it affects the supply chain. So when we talk about emissions, you break it down into 3 categories. The first one is direct emissions. So from a farmer's perspective, this is things that are happening on farm, such as fuel use, fertilizer use, crop residue, etc., etc. Methane as well for livestock producers. Scope 2 is electricity. And then scope 3 is things from your supply chain. So from a farmer, that's like electricity that's going into manufacturing of your fertilizer, or fuel for transport to and from the farm. But if you look at it from the perspective of like a meat processor or a flour mill, they of course have their on-site emissions, and then they have their electricity use. But then their scope 3 emissions from the supply chain is actually from the commodities of your farm. And that's what they're interested in at the moment, and probably going to be more interested in going forward. Next slide, please, Sarah. And with all this, you know, I said the good, the bad, and here's the practical. That knowing your number and being aware of emissions, certainly I believe that's part of best practice management. That the world is heading towards net zero 2050. Policy levers are being pulled towards it. Almost all businesses are going to have to, you know, be thinking about their emissions going forward, no matter what they do. But inside this, there's also opportunity to benchmark, identify inefficiencies, and enable data-informed decision-making. And it's also just an opportunity to engage with your supply chain with transparency and openness. Like, for example, if you like selling to Asahi, for example, say like, hey, I can also give you an emissions number with that barley to solve that problem you have with your scope emissions. Next slide, please. So in terms of measuring emissions in Australia, as you saw in most slides before, the current industry standard is the GAF tool, developed by the University of Melbourne. It is based on Excel. And what it does is you go in, you input numbers from your farm, such as livestock numbers, livestock weights, grain yields, fertilizer use, etc., etc. It multiplies it by emissions factors in the back end, and then spits out emissions at the front end, both for the whole of the farm and also emissions intensity for products. With that second bit, emissions intensity for products, probably being more of interest to more people, because not every farm is the same, but you can certainly compare a kilogram of beef or a ton of wheat. And when we talk about emissions as well, you always translate it to carbon dioxide equivalent, whether it's methane, nitrous oxide, etc., and that just allows you to compare apples to apples. All right, next slide, please. Where do you get the data from? So the good news with a lot of the tools that are available, including the GAF tool, including environmental accounting platform, which is based on the GAF tool, a lot of things, a lot of landholders already know from the top of their head. And if they don't know, these tools are designed that, hey, you know, your agronomist might know or your accountant might know. So these tools, it's not 100% correct. It's 80, 90% correct for the reason to make data collection as easy and simple as possible. Next slide, please, Sarah. So with the environmental accounting platform, as mentioned, it's based on the GAF tool, which is the current industry standard. So GAF tools, they're normally done by individual commodities, whether ours does all commodities. That's the thing we're probably the most proud of, that, you know, we are a one-stop shop for mixed farmers, and you can do everything in one place instead of having to divvy up between your sheep mob, your grain enterprise, etc., etc. Once again, we were backed by 10 of the RDCs, and with us being a non-profit, we do back ourselves to let farmers be in full control of their data. E.g., we can't actually see how people use the platform and what numbers they put in. Next slide, please. I might just take over the screen share to show the platform. So just let me get that up quickly. So here's the platform as is, but to find the environmental accounting platform, you can go to AIAEIP.com or just put into Google AIA environmental accounting platform. And to set up a new account, you just go here to log in. Now, there's no password, so you're always sent a code to your email, whether you're signing up for a new account or you're just logging in. So just give it a moment to think. One second. Let's have another take of that. Yep. So you put in your email address here. You wait a moment to get a code to your email address. Yeah, that ding means it's come through. Put it in here.
Hello. Good.
And then for the sign up, yeah, you just go put in your details.
Okay.
So we can see these details, including your organization. But in terms of anything you put in emissions calculation wise, you can't see anything else. Put in your commodities here. And then further down here, you'll see the terms and conditions, as Mo was saying before. Make sure you read it. But as I said, we pride ourselves in being a non-profit, a non-commercial entity, and being in a position where, you know, we obviously do care how people use the platform, but we don't need to know. That is your information. The only thing you can do, if you would like to help us know a bit more about how our platform is used, is down here. Click here, and then we can see aggregated and anonymized data to see how people do use it. All right. In terms of setting up a property, you just go here for new property. There's two ways you can do it. You can either make a property in the ether, or you can zoom into the physical location. Now, firstly, a big thanks to James Henderson from Isidore Ag, who's let me use his property in CQ. Just a heads up that when we look at the numbers are not from his property. They're the numbers that have come from a GAF spreadsheet that Mo has sent me. But yeah, in terms of the physical location, big thanks to James for sharing. AgForce downs. Yeah, you put down what enterprise you run here. So this is a beef enterprise, but we also have some forage crops, so we need to put in grains. If you have renovated pastures that you apply fertilizer and chemicals to, you need to put in pasture to account for those emissions. And you've got some trees that you would like to claim some carbon sequestration off, you click planting here. Going further down, you just need to say whether you get more or less than 600 mil rainfall. This affects your emissions calculations for leaching. So in this case, yes. And then you just click confirm to create property. And the other feature I will note before we get too far into the actual calculations themselves is under account here, you can go to My Teams and you can invite people to view the calculations you do. So for example, if you have an agronomist or a trusted advisor who knows how to use the tool very well, or might be able to help you fill in some missing numbers, you can allow them to view or contribute to the calculations you do. All right, so we're going to get out of this one and go to a pre-prepared calculation I did before. So as we can see on the left-hand side, there's 3 different types of data. Now, I'd say here for mapping, unless you're really keen, try to avoid it. And also this one here for commodities and products, it's not relevant unless you produce finished goods from your property. So the main one we're focusing on here today is business activities. So as you can see here, we have our beef herd, our cropping, our pasture, and our trees. Now, you will note down the right-hand side here that there are numbers, right? Which are calendar years. When doing these emissions calculations, it's important to know that it's for 1 year. And how the EAP engine works is that you have to do a consistent emissions year for it all to show up. It's just how it works. So as you can see here, we're running our emissions year to a financial year, but we go to calculations here and do a calendar year. Give it a moment to think. Nothing shows up. Carbon neutral, net zero, awesome. But that's a lie. We have to go to the last financial year. And then our emissions will show up from the calculations I've done previously. All right, so when you are setting up your beef herd, for example, you would go add name of the herd, and then make sure that each herd or crop you set up is running to the same year. So in this case, we're doing July to June. I know it might be dumb that, for example, if you're growing oats over winter, you're still having to do, you know, a July to June year. But yeah, just try and fit it in the best you can. The example I'd give for oats is just make sure, do it when they're reaped rather than when they're sowed. All right, so we go look at our cattle. When you go in here, the first thing you see is the tabs of the shop up the top, which is breeding livestock, trading livestock, and feed. Breeding livestock is for your breeding herds. Trading livestock is obviously if you have cattle going in and out. But both of them are the same, that when you get down into the herd, there's animal classes and you just got to tick them on and off, right? So for example, if we were keeping steers for more than 1 year, we'll just go on and then input numbers over here. We'll go have a look at breeding cows. That here you can see you start off by inputting your numbers. And then you just note changes from births, deaths, aging, and also change from sales to purchases as the year goes on. So here we can see I have a sale for, no, I've had an addition of 300, which is actually my maiden breeding cows aging up. And here you can see there's the tab of adding additions of aging in, births, etc., etc. Just a quick note with these numbers as well, that even though I know that these 300 have aged up from my maiden breeding cows in a separate tab, you need to manually input it into that category in the other one. So you might just need a pen and paper with you to note these changes as you go along. Similar with sales, that you just click on transaction and then you just have, you say whether sale or purchase, say the number, and then say the weight. Now, for all 300, you can do the weight together, but in reality, you probably just want to quickly click on calculate total to do it per head. A common mistake that I know I do myself is enter total directly, but only do it for one animal when actually there's 300. Like, you know, these 8-year-old cows don't weigh 1.5 kilograms each. All right, so here we can see with the numbers that the head at the end of the month flows through depending on what changes you do here. So as we can go on from 1,500 to 1,800, back down to 1,500 after selling some cows. And on the right-hand side is our weights. Now, you import your weight at the start of your emissions year, and then you just tweak the weights throughout the year by daily live weight gain. Now, if you just have a general idea about what their weight is at the end of the month or the end of the season, you can just tweak it slightly with these numbers here as you go forward and kind of work way backwards. A difference from a GAF tool that some of you might be familiar with is that GAF tool you have to calculate both weight at the end of the month or season and also the daily weight change. Whether here you just do the daily weight change and that calculates the weight here. The other thing to note as well is calving percentages, just hidden over here on the right hand side. If your screen's not big enough, I might just have to scroll across at the bottom. And here we can see it's 66%. So I'm gonna spoil it right now. The number at the end of this one isn't going to be super duper pretty compared to benchmarks. By design, by the way. All right, I'll just show you that aging up process from the other side. So we'll go into our maiden breeding heifers. As we can see here, pretty similar. You start with the number at the start, and as you can see, they start off pretty heavy, and then they age up to breeding cows. Now, the one thing I will note when you are doing aging up is there's aging in, but there's not aging up or out. You just need to put it under other removals. It's just how the tool works. And here we can see we have calves aging up past 1 year because they hit the floor around October, November. And here we can just see we've had them aged in. Yeah, once again on that emissions year as well, it probably would have been more convenient for me to do it, October or November, like for example, November to October, to be in line with the breeding cycle of the cattle. But because it is a mixed farm and we do some crops, I've just done it financial years. It's just one thing, so you just need to note how the numbers float through, and it might just be a case of knowing when you're about to jump from one category to another, about just like jotting down on a piece of paper when that change happens, so you know to update on each. All right, we might go into feed really quickly. I didn't include any trading livestock in this one. If you didn't select pasture and crops and cropping at the start, if you click on here, it will create those tabs under business activities you were seeing before. But in terms of other feed, you have the opportunity to add in mineral blocks, weaner blocks, dry season mix. I'll just show you how a dry season mix works quickly. That you have include the tonnage and then a percentage of urea present in the product. Now, if you want to get really complicated, you can also go into feed matter and dry matter digestibility, but the calculator will automatically do it for you. And so unless you know these numbers and are really keen to work in the back end of the calculator, best just to leave it. A quick note on sheep as well, that if you are doing sheep calculators with this, the key differences are that with sheep, you don't calculate daily live weight gain, you calculate weight at the end of the month. And with sheep, you have to add in wool events, which wool is just normally a case of saying how much wool shorn per a kilogram per animal class, and then the total clean wool yield from the animal class in total. Now, we might just quickly go have a look at our crops, just show how that works. So here we got some forage sorghum and some forage oats. So we might go into our forage sorghum. That the first thing that happens when you come up, well, firstly, I'll just show you this, that, yeah, you said name of the crop, the year of the crop, and once again, line it up to your consistent emissions year. All right, so when you are inputting the actual data for it, that's just a case of saying like how many areas you planted in hectares. If you've drawn some maps, you can just do manage on the map by clicking those paddocks. The crop type from the drop-down menu here. And then once again, you can either enter the total yield from that crop, or you can just do yields per tons in a hectare. Now, the next step is to go how was the soil improved, which was liming and fertilizer. For fertilizer, it's just a case of saying what fertilizer type you used. Then it will break it down into its elements, and then the application rate per hectare in kilograms. Something to note is the emissions calculation is actually based on elements rather than fertilizer. And this is something that's slightly different from the GAF tool, is that the GAF tool, you have to break down the elements yourself, whether on the environmental accounting platform, it breaks it down for you. Now, just a quick look at chem use. So here we've used good old glyphosate as a knockdown. Here, it automatically takes you to single product recommended, where it just gives you the option of choosing the chemical type, choosing the brand or type, et cetera, and then it works out the active ingredient percentage for you. And then you just do the application rate per hectare in kgs. And this is pretty handy because the emissions is calculated based on the percentage of total kilograms of active ingredient used. Whether if the chemicals you're using isn't in here, you can calculate it yourself, but it would just be a case of you working out, you know, how many kilograms of active ingredient was used by its application rate per hectare, and then multiplying by the amount of hectares it's gone on. Oops, my bad. All right. Whilst we're still on emissions, we might go into energy and commodity consumption. So enterprise and land management is obviously the commodities you're producing on farm. Energy and commodity consumption is electricity, fuel, and any commodities you might have been buying into the farm. So I'll just show you electricity quickly. That you go in, you see the consumption period. I personally like to put it in, but it's optional, and I'll show you why in a second. You say the source, about whether it's coming from the state grid or it's renewable, and then the amount in kilowatt hours. Hopefully this can be found on your BAS statement, but I'll be honest, electricity doesn't affect your emissions at all. Pretty much, it's very minuscule. So I wouldn't spend too much time overthinking that number. With fuel use, it's similar, that you go in, you decide the source, about whether it's diesel, petrol, and LPG. If you're using both diesel and petrol, for example, you need to calculate it, do 2 separate calculations, and then the amount used in litres. Once again, that's hopefully on your BAS or some other easy to find location. Similar with hay, that when you buy in commodities such as hay, grain, or cottonseed, it's just a case of putting in what year it was used in if you want, and then the amount purchased in tons. So as things stand, the emissions from these products here, they contribute to your whole of enterprise emissions, but not to the emissions intensity of your farm produce, right? So the opportunity to allocate the emissions from these things here comes in this next tab, allocation to enterprise. So for example, if we go into hay FY25, 100% towards my main mob in FY25, it's nice and easy. If you had a little sheep mob, you'll just have to work out what percentage. You know, for example, with this one, we got about 1,800 cows. Whether you had let's say 1,800 ewes as well, you'd probably go 90% to the cattle, 10% for ewes, because you know a cow is 10 DSE and the ewe's only 1 DSE. And up to you how you break out that calculation personally. Same with our cropping, because we've used our cropping for foraging on farm, we've actually allocated those emissions to our beef herd as well. Whether if we didn't do that, it would just be a standalone calculation down here. Now, our last thing down here, it's not all doom and gloom with emissions. There's an opportunity to get some credit, and some of the credit you can get is for the emission sequestration from trees. So we go back to enterprise and land management quickly. You will see down here that there's trees. And the first thing to note as well is that it's not running to 1 year. It's just running, well, perpetually until the end of time. So it's just a case of, you know, I've done 2 years worth of emissions here. Whether it might be a case if you're only doing 1 year, instead of July 2023, you'll do July 2024. All right, so when you go on with your trees, it's just a case of saying how many trees you've planted in hectares. Once again, you can manage on the map. You can actually draw out trees manually yourself. Say what region. Keep in mind these regions aren't exact. They're pretty rough. And then saying what soil type of trees, and the age of trees. And then that will give you some emission sequestration to be minused off your emissions. And then if you're a mixed farmer, you have the opportunity to credit that sequestration where you want. So for me, because I'm only really selling cattle off the block, I've just put it all on cattle. Because these trees have been running for 2 years, I've just done 50-50. But for example, if I was wanting to sell some of my cropping, I can go, oh, wait a second, I want to sell my barley to Asahi, so I'm going to allocate 100% of my emissions reductions to the barley. All right, now the interesting bit, which is the results. So once again, nothing's going to come up here because we're still running off a calendar year and not emissions year, which runs parallel to our financial year. So we're just going to go back to financial year. Yeah, and this gives us our total results. So in terms of emissions that are happening on farm, our scope 1 emissions, it's about 4,500 tons of carbon dioxide equivalent. Scope 2 from electricity, 4. So about 1/100th of scope 1. As I said, it's only a little bit electricity normally. And then scope 3 from our supply chain, e.g. the emissions that have gone into our fertilizer or from carting hay to our property, also pretty low as well. This number is normally a bit higher for croppers, for example, who are obviously having emissions from the from buying more fertilizer. Oh, and here we see the minusing from our trees. All right, so once we get down here, we see that 90% of our emissions are methane, even though our results are in carbon dioxide equivalent. Once again, everything gets translated into carbon dioxide equivalent because we're wanting to compare apples to apples here. When you go up here, you can click on all enterprise types, and then you have the opportunity to break it down per commodity. So if we go into our beef herd, we get to see another level of data. That here, we still have our scope emissions, but we also have emissions to the next level where we get to see what's methane, what's nitrous oxide, what's come from urine and dung, and what's come from things like fertilizer use. Just a quick note as well that this is all of our emissions from the farm, because the only other thing we're really producing at crops, we also allocated to our beef enterprise because it's forage. So this is pretty much everything. All right, and then down here we can see our emissions intensity, which this is the number that most people are probably more so interested in, because once again, no farm in Australia is the same, but there's the opportunity to benchmark based on a kilogram of beef or a ton of wheat. So here we can see that without sequestration, without our trees, we're about 16 kilograms of CO2e per kilogram of beef. But with trees, we've minused about 10%. Yeah, let's just say that 10% of our emissions. I'm just going to do a quick comparison to our previous year. From my understanding, things in CQ were pretty dry over the last summer. So we'll go to the year before, which was a better year, and look at our emissions there. And as we can see, it's 13 without sequestration and 12.8 with. So yeah, we're about lower by about 20%. And FYI, the things I did different in the calculator was for FY25, I had a 66% calving rate, whether in FY24 I had 80%. I also had higher live weight gains in FY24 and less hay brought in. And because of these slight changes, yeah, it's affected my emissions profile by about 20%. Now, with this information here, there's once again the opportunity to invite an advisor to go view your account, or you can also just download the information here as a PDF where it will have these pretty little graphs at the front end, but it will also have the breakdown of the emissions calculators, of the emissions calculations in the back end as well. All right, I might wrap things up here and open up the floor to questions.
Thanks, Brady. If you just press stop sharing.
Yeah.
Great.
1 second. Yeah.
So do we have any questions from the floor? There is. I wrote one. Do you have to enter data for every month? As in the GAF tools, there's one for entry 4 times a year instead. So, most properties are not going to have monthly weights.
Yep, and that's really an estimation that, you just put in a couple extra kilograms during the wet and take off a couple during the dry. There is an opportunity to autofill which will just give you the same weights throughout the year. But I would say, yeah, just go down month by month and tweak it based on the season, based on what we've seen, and just eyeballing it. And once again, with that information going in, like nobody's weighing their cattle once a month. That would just be a case of best guess. And, as long as the numbers are realistic, not too many people are going to ask questions.
Yeah.
Sorry, Mo, you go.
Yeah, if you can see that, that'll be good. You can just one from Ian.
Yep, I was just reading that one about comparing to similar farms. No, that feature isn't there. To give you a reference from the numbers we were talking before, the range for emissions in Australia is normally for a kilogram of beef is between 11 and 16. So during my bad year in FY25, I was at the top end. During my good year in FY24, I was about medium. So in terms of the number that's spat out at the end and how interested you are in seeing how you stack up, it just might be a case of, just chucking into Google or having a look yourself or talking to one of your trusted advisors about it. But I'd also be pretty clear with the number at the end, right? At the moment, with what the supply chain's asking for, it's not about low emissions. It's not about no emissions. Right now, the goalposts are just about being comfortable with like how you measure emissions and just getting a number full stop. The fact if you can spit out a number, you're doing better than 95% of farmers in Australia. That's where the goalposts are at the moment. And I just noticed that Bex might have a similar question to the result at the end. That are things flagged if there's another number at the end? No, because we can't see that number at the end. The platform is designed 90% data security for the producers. But that being said, if you're just curious about how the number is a little bit funky at the end, there's always the opportunity to get in contact with us. Give us access to your account via the advisor feature in the top right corner. And I'm sure that, Sarah, myself, or someone else from AA would be happy to go through and be like, okay, where might have there been a mistake?
Brady, I might just add to that too. We've had that question before from other users, and we are contemplating putting a text box next to some of those areas with expected ranges. So there'll be an indication of if something is right off the charts and not within that range, that maybe you should take a look at it. It won't specifically flag it, but there'll be a text box that may have some ranges there for you. So that's a feature we're looking at implementing in the future.
And so also, I know that in the GAF calculators, if you're north of the Tropic of Capricorn, your manure management figures double. Now, are they looking at making that a bit more accurate, or what's happening there? Like, I'm based on the Atherton Tablelands with rainfall over 2 meters a year. Obviously, my manure management figures are nowhere near what they are at some of those Western properties that see 300 or 400 millimeters a year.
So, Mo, there's some people may be aware that the Department of Climate Change, Energy, the Environment and Water are actually working with the Department of Agriculture to create new emissions estimate guidelines. So that work has been underway since last year. Consultation, I think, was towards the end of last year, and they're working through, I think, in a couple of tranches, some new guidelines on how these emissions estimates will be conducted. So it's not saying they'll necessarily replace GAF, but there will be potentially some different methodologies sitting behind that. And I do know that there's things like fertilizer will be dealt with quite differently within those new guidelines. We are aware of that, because part of the grant that I mentioned earlier is actually supporting AIA transfer from using the GAF to these new guidelines once they are available sort of in the middle of this year. So there is work underway to develop those new guidelines. As the tranche 1 consultation from the government has completed, but there will be opportunities to be involved in the consultation process from tranche 2 as well.
Yeah, and something I might add to that as well is that with the tool, it's roughly right and precisely wrong. That, like, it's not 100% accurate, it's 80% accurate. If you think about telling the time, the GAF tool and the EAP tell us time to the hour. If you want the time told to the seconds or minute, that's where you probably need to get, a consultant in to do very specific calculations for your specific enterprise. Like the tool doesn't want perfect to be the enemy of good.
Yeah, obviously your tool, the more data, the more accurate the data you give it, the more accurate figures you're going to get out at the end. What about like the feedlot industry has just been announced that they've been allowed to get a 50% reduction in methane emissions. Has that been reflected in the calculations in your calculator, or is that still to come?
Yeah, so anytime there's a change to the University of Melbourne's GAF, changes are made to our online environmental accounting platform. So we work very closely with Richard Eckard, who is actually the chair of our technical advisory panel, and also sits on the Zero Net Emissions for Agriculture CRC. And we're also working very closely with the CRC. So anytime there's a change reflected in GAF, whether that's come through the inventory or other ways, that then gets reflected in our platform.
Yeah, thank you. And is there, like, we ran a whole heap of workshops around the state last year, and most of the feedback was about further research away from Melbourne in more remote districts of Queensland to get more data that's more relevant to these areas that are very different to dairy cows on ryegrass. So is there more research being done, and what's the likelihood of some of these figures coming out in the near future to give us more accurate data?
Absolutely, Mo. So the Rural Research and Development Corporations, so the MLAs and GRDCs of the world, are obviously always working on researching this emissions space. And also the Zero Net Emissions from Agriculture CRC, obviously that's a large remit of theirs to be looking at about emissions and emissions related research. So there's a fair bit of work going on through the RDCs and the CRCs in those spaces. AIA does not do R&D. So as I said before, we sort of create solutions, whole of sector, cross-sectoral solutions. So we reflect the science that comes through as opposed to being directly involved or engaging with conducting that science.
Yeah. Thank you very much for that. Are there any other people that have got any further questions? If you don't feel comfortable using the chat, just put your hand up and we can assist you there as well.
Thanks, Sam.
Brady, I'm wondering, I might just put that final slide up, if that's all right, Mo, which is just some take-home messages from us about what you should be thinking about.
Yep, and then when you share that, then very soon I'm going to put up a link to the participant survey that we need to do as well.
Yeah.
So if you just want to run through that one, thanks.
Sure, over to you, Brady.
Yeah, thank you, Sarah. So yeah, my biggest take home today would be like, have a crack yourself. That the GAF tools and the AFEs, does try its best to be as user-friendly as possible while still trying to do what it's supposed to do. So yeah, don't be afraid to log on, have a crack. I know our details at AIA aren't too hard to find, so if there's any problems, more than welcome to get in contact with us. We're actually happy to do individual walkthroughs. In terms of other trends as well, I would say, in terms of changes with your supply chain and who you're selling commodities to, be aware but not afraid of upcoming changes with emissions reporting requirements. So it's maybe worth asking a question to like your local representative from, I don't know, Tees, Bungie, or whatever, and be like, hey, what do you guys want with this? And yeah, in terms of collecting the data, just get comfortable with keeping some of these numbers in mind. Going like, oh yeah, the fuel use from my fuel and electricity from my BAS is worthwhile keeping in mind, or being like, just prepared to have that mental calculation of when cattle are putting on and losing weight, as I'm sure most people do already. And the other thing as well, trusted advisors such as agronomists and accountants are thinking about this as well. They're trying to upskill. So if you do have a trusted advisor, well worth popping a question to them to be like, hey, what do you know about this? Or does your company have a service offering in it? That's all from me. Just a mute way.
Now it's coming off. I was pressing the button and nothing was happening. So I'm just sharing my screen there
think you're on mute again, Mo.
I didn't even press a button and it muted me. Obviously doesn't want me to talk. If people could please complete the participant survey and answer it honestly. And when you're looking, the first two questions, who ran the workshop, if you type in AGF, it'll come up as AgForce training if you click on that. And then which workshop, if you start typing ONL for online, then the series of workshops will come up there, and you just select the online series 1 for today's workshop about calculators. And please make sure that you fill those out and then press submit at the end so that that data can be collected, since it's all funded through the Commonwealth Government and GGA. So any further questions would be appreciated. Otherwise, Brady and Sarah, thank you so much for today. Sorry to put you under a bit of pressure asking a few extra questions, just that I know that they're questions that have been asked in the workshops that we ran last year as well. So I'm just reiterating some of those things, which is great.
No problem, Mo. Thanks for having us.
So, no worries. Thank you very much. And thanks, everybody.